Hello everyone, George DeSantis here with a look at the market for the week ending February 1st, 2019. As usual, we will take a look at the disclaimer. I urge you to read it, to be aware of the fact that I'm not a professional investment advisor, so this video is not an attempt to give any advice to anyone. I couldn't possibly do that because I don't know who you are and what your circumstances are. So with that in mind, we will begin to look at the general market vis-a-vis the S&P 500, and then we'll turn to some individual stocks and take a look at those. Okay. Before we turn to the charts, we usually look at here are a couple of charts from Barron's this weekend. The first one is a chart that compares the CBOE put call ratio and the S&P 100. Well, if at the top here it says, look, if the CBOE equity put call ratio is at 60 or thereabouts, and the S&P 100 is at 125 on this chart, that's bullish. So you can see that on this side here we have the put call ratio is just above 60, and the S&P 100 between 115 and 145, I would say that's pretty much close to the 125 level. So as far as I'm concerned, this is telling me that we're in a real sweet spot insofar as this indicator is concerned, the put call ratio. So we should go higher. The other chart here shows us that the Dow is making new highs, and the transports, the Dow Industrial is making new highs, and the transports are doing likewise, which according to what I understand from Dow theory is that the transports are confirming the new high of the Dow, and that is also bullish. So we have two very bullish, or at least bullish, indications here for the market. So let's turn to the regular charts now. So here's a weekly chart of the S&P 500. And what do we find here? We find that after this major pullback here, I don't remember what the percentage pullback was, what it was, the market started to rally. We're still rallying. I found that to be pretty unusual because I was expecting somewhere here that we would find a retest of this low, but so far we haven't. Now what we're looking at right now is that take a look at the candlesticks. This candlestick for the past week totally engulfs this doji candlestick here, and therefore it's called a bullish engulfing candle. Now we can't base our trading decisions solely on candlesticks. We need to take a look at other indicators to see if we could rely at all on the candlestick formations. But this is pretty bullish. This is a bullish engulfing candle on a weekly chart. Now we've already broke above that 2600 level here that we were looking at. We were saying that is a key level. We broke above 27. We closed at 2706. 27 was where the 9 and the 9 week and the 50 week moving averages clustered together, and now it looks as though we're heading toward 2801 or 2800 or so, which is another level of resistance. But this market is looking pretty strong. Insofar as the moving averages are concerned, the other moving averages, you could see that the 4-week average just crossed above the 9. Let me move this from here so we could see more clearly. The 4-week average is now crossing above the 9, or it just did, and it looks as though these two averages, moving averages, are headed toward the 50 and the 30-week moving averages. And if we cross that, we should get to 2801, which is the next resistance level. We get past that, then we're heading up to 29, which is approximately where we had this high up here, 2920, 2950 or so, 2934, 2950. I think it was about 50. So there we go. Now look at the other indicators. MACD has been negative and in bearish territory all along. Now it started trending up, and as you know, if you read Alex Elder's books, you will know that he points out that one of the best times to be in the market, buying the market, is when MACD is trending up from below the zero line, MACD histogram. Now, what happened last week? MACD turned bullish for the first time since back here, which is October 5th. So we are now in bullish territory on the MACD histogram. Looking at the other indicators, Williams percentile is now over the minus 50% line, and that's bullish. We like to see that, because you notice that when the market was trending up all along here, that Williams percentile, a 30-day period, was always above the 50% line. When it crossed below it, that's when all hell broke loose. Now we're back above it, so I expect more blue skies. The sum of the rate of change indicator is just kissing the 4% line, just below it. So we're likely to see that cross above it soon. Now the RSI 12 on the weekly chart is a very powerful trend indicator, and when it's above 40%, we are not in a bear market. You don't find this indicator, the 12 period RSI on a weekly chart, you don't find it above 40 when we're in a bear market, and we are now above 40%. So folks, I'm going to be fully invested next week. I'm just about there. And here's the daily chart of the S&P 500. You can see that since the 4 crossed over the 9 here, and the 9 crossed over the 30 here, we've been in a nice uptrend. And right now, the only risk we find here is that we are hitting the upper Bollinger Band. That often poses a situation where we will get a pullback more into a buy zone area in here. There would be more of a buy zone in here, because the upper Bollinger Band is at 2 standard deviations above the mean. However, we still have an uptrend. According to the moving averages, 4 above 9, 9 above 30, and the 9 is also above the 50-day moving average. We also have MACD histogram in bullish territory above the zero line. These other indicators are all bullish. They're above the key levels. Williams percent are above 50 or minus 50. Some of the rate of change above 4, and RSI 12 above 60. So the market's looking pretty bullish here to me. So I'm going to be fully invested. Again, I'm almost there, fully invested. So let's take a look at some individual. Before we get to the individual stocks, I want to show you some stock charts. So let's do that now. Let's take a look at the new high, new low index. You may recall that when we dropped all the way down here, meaning that we were making many more new lows than new highs, Alex sent us an email, and I forwarded it to you. He sent me an email, I forwarded it to you, and he pointed out that once we get above minus 4,000, that this market is going to turn around. And that was exactly in January when it did that. So now it's trending up even more. So this is also supporting the bullish case. Let's take a look at something else. Here's a chart showing the weekly chart of the S&P, showing the impulse indicator. The impulse indicator paints the bars green, blue, or red. It's a censoring indicator. It tells you what you ought not to do. Not what you should do, but what you ought not to do. In this case, what we're finding here is the current bar is telling us we ought not to go short. In other words, if we're going to do anything, go long or be bullish or buy the market. If you look at the daily chart, let's see what we find. On the daily chart, we are seeing a lot of green bars as well. We had some blue bars here, and the blue bars you could go either long or short. But since the moving averages are all trending up, you don't want to go short here. So let's take a look at something else. This is a McClellan indicator, and you can see that the McClellan oscillator is now very bullish. So let's turn to the regular charts now. Here's a daily chart of the VIX. We've all heard of the VIX, the volatility index. So you remember that if you read Larry McMillan's work, you'll see that he says when the VIX gets to below 15, you want to be bullish. Well, folks, we're almost there. We're at 16.14. So this is another bullish indication. Uh, and the VIX, according to Laszlo Barini, the VIX is not a very good forward indication of the market. It doesn't lead the market. It's not a leading indicator. But what we know is that when VIX starts to come down, it's inversely related to the market, to the S&P. So as the VIX is coming down, the S&P is going up. And now we have VIX almost below 15. It's at 16.14. Let's hope it continues to do that. So let's look at some individual stocks. Let's start. I have a list here of stocks that I either own or follow very closely. I recently bought Applied Materials, AMAT, and you can see that it just broke above that long-term trend line here of shaking analytics. Money flow is pretty good. It was oversold and now it's moving up and it's very bullish. So I bought that. Here's Facebook. I also bought Facebook, and again, the same kind of picture, breaking above that long-term average, money flow looking pretty good, and it was oversold. And you can see that the relative strength has now turned bullish. So the change of personality, as they say, has shaken, and now it's very bullish. Here's Salesforce, CRM, another bullish stock that I own. And you can see shaken money flow is pretty strong here. It was oversold. It's still oversold. So it's starting to move up again. And you can see that the relative strength is strong and it's also bullish. Here's Etsy. You can see that there's a triangle here, a symmetrical triangle. So look for it to break above this triangle, somewhere above 52 or 53, because the money flow is pretty strong. It's now oversold, and these other indicators are looking good. Relative strength is strong, and it's neutral. So I still own that one. Another one that I like very much and I own is Workday. It pulled back, gave a little scare here when it pulled back, but the money flow still looks pretty good. It was oversold and now it's had a nice move up in the last couple of trading days. You can see these other indicators are still looking pretty good here. That's Workday. Here's another one on that list that I sent you, and you can see that it's still trending up nicely. It was up 3%, almost 4%. On Friday, and it became oversold and it's ticked up a bit. So this is a nice one, but I don't own it right now. Here's PayPal, which I own. It's been kind of flatlining here, and now it's just at the long-term trend line, moving average. But I like the fact that it's now oversold, so I'm holding it. I'm not selling it here. Another stock I own is Adobe, and this is a daily chart of it. You can see that it's below the long-term trend line, and it bounced off of this 21-day moving average. But it's now oversold. I am holding it. I still have it, and I'm holding it. Another one that I have on that list that I sent you is Alteryx, AYX. Now it's above the long-term trend line. It's bumping off of the 21-day moving average. And the other indicators are looking good. And the fact that it's oversold right now, I'm going to continue to hold it for a while. This is the relative strength is looking pretty good. It's neutral in terms of its power gauge rating. Here's a quick look at Netflix. I just own some calls expiring March 15. So I'm hoping to get a move here. It looks encouraging right now because it's oversold on shaken here. And we'll see how it goes. Here is a daily of Ring, RNG or Ring Central. And you can see it looks nice here. It's bumping off the 21-day average. Don't own it, but it's now trending up nicely. And these indicators, it's oversold. Money flow is good. This is strong. It's neutral. It's not a bad looking stock to own. That's all, folks. That's all the time we have. Go Rams. I think Brady is going to eat some dirt today. And I hope so. I don't like New England.